Gold is the most popular precious metal with investors and the usual inflation hedge investment. Looking at inflation and inflation expectations, it makes sense to consider gold as an investment right now. That's why we should talk about what drives the price of gold and should we actually get some gold. If you want to know more, smash the like button and let's get to it. Bloomberg, CNBC, every single financial news platform loves to talk and speculate about gold prices. However, to do that, you first need to learn what actually drives the price of gold. First of all, like any other commodity, good or service, we have supply and demand. Looking back at 2021, we can see a few things. Gold demand is strong, hitting 4,021 tons with demand for jewelry increasing dramatically, plus demand for gold bars and coins reaching the highest level in 8 years. Central banks also increased their gold reserves by 463 tons, reaching a total global gold reserve of 35,600 tons, which is the highest since 1992, basically 30 years ago. Industrial use for gold went slightly up to 330 tons, which was just 8.2% of the total gold demand in 2021. On the other hand, the total gold supply fell to 4,666 tons in 2021, by around 1% as compared to 2020. Even though gold production from mines went up by 2%, recycled gold actually fell by 11%, which resulted in the overall drop. Still, we can see that there is definitely more than enough supply to meet demand, and from the looks of it, there is no pressure on gold prices from a supply and demand point. The second important factor is inflation. This is really why everyone has been talking about gold. I talked about why gold goes up in inflation in my previous video about silver, so if you haven't seen it, check it out at the top right of this video or in the comments below. Basically, gold is an inflation hedge and tends to go up when inflation is high, but obviously there is more to it. Still, the inflation right now is pushing more and more investors towards gold. In February, US inflation hit 7.9%, UK inflation hit 6.2% with expectations of it hitting 8% by June, while the Eurozone inflation rates hit 5.8% and Canada's hit 5.7%. Still, every single central bank expects higher inflation figures later in the year, hitting up to 8 or even 9%. Given that inflation has so far exceeded expectations, we may even see double digits. This is one of the main reasons why investors are flocking to gold and why gold has been going up recently. This also leads me to the next factor that influences gold prices, and that is the strength of the US dollar, as gold is mainly denominated in dollars. Obviously, inflation erodes the strength of the dollar. That's what inflation is. To prevent this, the Federal Reserve, which is essentially the American central bank, they raise interest rates. In the middle of March, the Federal Reserve raised rates by 0.25% and said that they will keep raising the rates every month by 0.25% until we see 1.9% or so by the end of the year. If we see inflation spiking even higher, they may even raise the interest rates by 0.5% every time to a total of about 2.9 or 3%. When interest rates go up, the value of the underlying currency becomes stronger because you can no longer get cheap loans. You can no longer print money for free essentially, and you also get a better reward when you actually hold on to the currency. Typically, when rates go up, the price of gold goes down, so the interest rates could push the price of gold down over the course of 2022. However, the main question here is, will the Federal Reserve actually raise interest rates that high? And if they do, will that actually contain inflation? There's a lot of opinions on both sides, so it is very hard to tell, but we will know for certain by the end of the year. I personally think that those interest rate hikes are too small to do anything, and the reason why is that the Federal Reserve is trying to do a soft landing. Basically, they don't want to raise interest rates too high too fast and cause the markets to crash, so they're being cautious about it. This is nice on paper, but they should have really started doing this months ago. It's a bit too late now really. They need to act big and they need to act now, or at least that's how I see it. It can be easy to speculate though, so I guess we will just see what happens in a few months. Finally, we have market volatility, economic uncertainty and geopolitical tensions. Even though these are three separate things, they have the same effect. Investors get worried about their assets and they want to protect them. The fact that gold is physical and has been used as a store of value since the dawn of human civilization makes gold a perfect safe haven investment. We saw gold jump when the war in Ukraine started. Why? Investors got worried about the ripple effect that the war will have around the world. Then, if we also take into consideration inflation, negative effects of interest rates on markets, and the economic stability of the US, supply chain concerns, and so on, we can see why there is a bullish case for gold right now. But exactly how high is the bullish case for gold? How high can gold prices go this year? Goldman Sachs sees gold hitting $2,500, which is much higher than gold's all-time high price of $2,063, which it hit in August of 2020. They are not the only ones to see such high gold prices though, and other banks and precious metal traders are also expecting gold prices of up to $2,500, with the average price for 2022 being around $2,000. Typically, we should be skeptical when we see such optimistic price targets, but I personally think this actually makes sense. I don't think we will see gold hold $2,500 for a long time, but there is a very real chance of gold hitting that price target after seeing everything that is currently going on in the world and what the expectations are. The current estimated market cap for gold is about $12.4 trillion on a gold price of $1,950, which means that the total market cap of gold will jump to $15.9 trillion if we see the target price of $2,500. Obviously, that's a lot of money that needs to flow into gold, and that will be almost entirely driven by investor demand. But again, I think there's a real good chance we will see that. In fact, I haven't seen a single negative or bearish analysis of gold right now. At worst, analysts expect that the price will stay roughly the same. Seeing how well gold has held its value over the last 2 years, that does not come as a surprise to me. The current support levels for gold are 1,900, followed by 1,830, then 1,730, and finally 1,680. On the other side, the main resistance levels are 2,000, then the all-time high price of 2,060, and after that, the sky is the limit. $2,500 is optimistic but definitely achievable, although I really doubt we will see prices higher than that given the sheer amount of money that will have to flow into gold to achieve that. There is one particular asset group that will benefit massively from the current gold prices, and that is the gold miners. So check out my video on the best gold miners in the top right or in the comments below. Also, make sure you subscribe because I will be putting out a few more videos looking at exactly that. What do you think is the best way to take advantage of the high gold prices? Let me know in the comments below. Make sure to leave a like too if you enjoyed the video and share it with anyone who will find it useful. Thanks for watching, and I'll talk to you again soon.